Happy VA Wednesday. So today I'm going to cover some of the top questions my team is being asked in May. That's right. I went to them and I said, guys, what are the questions you're getting asked the most? Now, if you're new to the channel, I'm a mortgage lender. My team's in 50 states now. Ranked the #1 loan officer in America the last 2 years for VA loans. So we do a lot of VA loans. We waive our lender fee. We want to help you. We're happy to answer questions as well. Give us a call, 786-933-2077. Shameless plug over. Okay, so Sandy gave me a couple questions. I'm just gonna read them and answer them. Do I need to get my COE before I apply? That's your certificate of eligibility. No. Here's the thing. So when you apply for a mortgage with us, you fill out the application at zerostressmortgage.com. The bot, we actually have a bot that literally will pull your certificate of eligibility as soon as we get the app. It takes sometimes 24 hours, but usually it's like that. If for some reason the bot can't pull it, my team just goes in and gets it. Like they need basic information, but that would already be in the application. So no, you don't have to have your COE. We can do it, no problem. If a lender's saying, oh, you gotta get that COE before you apply with me, they just don't do a lot of VA. And there's a lot of that out there, so beware. Okay, that's number one. The next one is, how do I buy more than one property with VA? That's a great question, and I love that because I've seen so many veterans build wealth by stacking houses. So the key thing is gonna be, we're gonna have to see what your max eligibility is. So let's say you bought a house in Ohio, you used a VA mortgage, it's $200,000, you're moving now to Texas, we're gonna do a calculation to see the eligibility you have left. It's really easy. We do that with your certificate of eligibility. But the key with VA is you need to live in the house you buy. So let's say that you live in Sugar Land, Texas, and you bought a house 10 years ago, but you want to turn that into a rental and buy a slightly bigger home for your family. Can you do that with VA? Yes, okay. Even if this still has a VA mortgage, we just have to do the mortgage worksheet to see how much eligibility you have left. So it's not hard. Where it gets sticky is if, for instance, let's say you buy a house, you live there for a year, then you're trying to buy another house next door. Like at that point, they're like, are you really gonna move there? But overall, generally where I see veterans stacking up houses is they're active and they're buying one at every single base. So really easy, we just have to calculate out your max mortgage eligibility. If you're looking at your certificate of eligibility and you're like, but Jen, it says 0. Look, the certificates of eligibility are gobbledygook. There's no other way to put it. It's like it says 0, but it's not really 0. There's a calculation that has to be done. And you're like, well, can you tell me how to do the calculation? Not in this video, unless you want to spend 25 minutes. Like I can give you to the link to VA so you can see how it's done. But it's something that we're always happy to do. And it's going to be based on the county you're buying in. So easy peasy. The next one is, why do other lenders require a 620 credit score, but you don't? Simple. With VA itself does not have a credit score requirement. And what's happened is there's some lenders that will be like, well, we don't want to deal with anyone under 620. Well, we don't want to deal with anyone under this. We don't want to deal with anyone under that. It's just their preference. But like, as someone who looks at credit reports all the time, guys, I see credit scores at like 565 where I think it's a better credit history than a 720 sometimes. Why? Debt. So guaranteed rate follows the VA guideline, which is we don't have a credit score requirement either. We look at credit history. And the bottom line is this, if you have a lower credit score, it's probably going to be a manual underwrite, which is no big deal. My team does them all day long. We love them. We're going to have to be able to show there's no lates within a year. That's it. That's if you're a manual. So if you're like, Jen, I'm not paying my bills now. Yeah, it's not going to work, guys. It's not going to work. But generally what I see with lower credit scores is it's something that happened in the past, right? Like there's not a lot of people who aren't currently paying their bills that are trying to get a mortgage, right? It doesn't make sense, right? Why would a company give you a mortgage if you're not paying for your car and credit cards right now? Like they're not going to. So generally what I see with lower credit is it's something that happened in the past. So we've got to show, no lates within the last 12 months. That's our key for a manual underwrite. Now, the thing I want to say about the lower credit scores, you really need to be careful. And I say that because there are less lenders that do lower credit scores. So there's a bunch of jackals, that's what they are, where they're like, well, your credit's 580, so my rate's 8% because your credit's poor. Nonsense, nonsense. Like, here's the thing. VA loans, whether you have good credit or lower credit scores, they're insured by VA. Okay, so if this person loses the house or if this person loses the house, VA still insured the loan. The whole game of your credit's so bad, I have to, charge all this money. No, it's just because they know they can shame you. You're a captive audience. There's less competition. And if you call a lot of the big boys, they don't do credit scores like that. Like, look, if you found my channel, you're going to call me and be like, Jen, they're charging this. What do you think? And I'm going to go, run, we'll take care of you. That's the thing, 786-933-2077. Whether you have good credit or bad credit, like seriously, call us, let us look at your loan summaries, let's make sure you're getting a good deal. It is the lower credit scores where I see a lot of predatory behavior, and they use financial shaming to justify it. And that just makes me so sick, and it's wrong. And the nice thing about guaranteed rate, look, if you're like 580 versus 800, is the rate going to be a little higher? It is. It is. Okay. They are looking at some level of risk of like, based on scores, who's more likely to foreclose, right? But is it a percent? No, it's like 1/4% at most from what I've seen. Like we've had files at like 540 where, on like a perfect 800, I'm at 6, and on the 540, I'm at 6.125 or 6.25. So the bottom line is we really approached it by, here's the thing, it could be from personal experience, right? Like when I was younger, I had terrible credit, and I just remember like all the shame that went with it, like just the way people treated me, and I thought it was wrong. And the nice thing about the company I work for is I said, guys, these are insured. Like, can we just please not be people where someone's already got something they're working on? Can we not kick them in the ribs? Can we just not? And they were like, yeah, from a risk standpoint, we can do it this way and that way. And I really like that. If anyone goes, well, Jennifer, why do you work at the company you work for? That's one of the big reasons. It's huge because so many other lenders, if you're in that range, they just kick you in the ribs because they know they can. And I really feel like, buying a house, you're starting a new chapter in your life. Wouldn't it be nice to start a new chapter where you're not getting gut punched if you have low credit? I mean, call me crazy, but I think that's the way it should be. So those were the questions we've been getting in May, kind of consistent to what we generally get, but I wanted to do this video with you guys just to cover some of these. But look, call us. Like my whole team, guys, I literally have people hired just to answer your questions. Seriously, that's their job. And if you're not calling and asking us questions, if you're not calling us and having us help you plan for the future, well, that's not good for them. So 786-933-2077, hop on the calendar. The whole team's here to support you. But yeah, look, we're happy to look at loan summaries too. Let's make sure you're not getting gut punched. Thanks for watching.